All right, good evening, guys. Mechanic Tortoise Capital. We're going to try this one again. Market Nightly Strategy podcast here for September 24th, 2021. In the market health check, we're still in the fifth day of this nice recovery from this dramatic sell-off to 4 sigma. It broke outside of the Z3 barrier. And then that rebound has just been amazing. And today it gapped down and then had a strong finish to close near the top of the dragon and the PSAR flip. So I will be ready, like on an RLXD entry on Monday, to continue to play that. I would play a second entry at the 10-day high if it breaks above that, and then a third entry if it makes an all-time high. I will also be ready to get short if it breaks below today's low. So this feels like the demarcation line in here, this between, basically a 1-day range. I see that as the indecision zone. So short if it breaks below the low, long if it breaks above the high. Just on straight continuation, standard play. In the regions, mostly big indexes were the big winners today. So the S&P was up 1.16. The Qs and the Dow were down, were slightly underperforming, a fraction below. We had IWM down 0.75, Treasuries down 0.5%, and then emerging markets down 1.2. There were only a few things better than the S&P today. Discretionary, blended commodities, finance, and the energy sector were all better. Marijuana was better at 2%. Tesla, the big winner. I think the story of this week was Tesla really performed well and closed the week well at 774. So it's within 15% of that all-time high, and I think it's pretty solid right now with another successful space flight for Team Tesla. And then the Bitcoins all got smashed hard. The currency or the cryptos got smashed hard on the news that China was making transacting in crypto illegal, except for their digital renminbi. So that feels like a demarcation line between the free world and the China sphere of influence. How strong are they going to be at compelling other nations that want to be trading partners to only denominate in Chinese crypto? Are we going to have essentially a clone of the internet problem where you have a Chinese internet strictly controlled centrally versus the internet of the free world with corresponding cryptocurrencies? I'm surprised that it took this long for that policy to come into play as a transnational challenge to national sovereignty in terms of controlling the money supply. So this is going to accelerate that debate in the press. Let's see. There was only one chart posted. This is from Nigel, and he was checking his learning on the hybrid frog. And there's so the hybrid frog is the intraday system that I teach in the advanced day trading course, and it starts with a hybrid frog box right from the open. And the main idea is that if this is the opening bell, wherever it opens, you put a hybrid frog box bracket around that. And I recommend 0.7 of a frog box, so 0.7 of a frog box. And you can see that he's got that here. So if this is the open, he'd have plus a hybrid and minus a hybrid, and your stop is right at the open. And you wait to see which way it's going to break out of those two boxes. And whichever way it goes, you take the entry, in this case right here, and then you trail it as it's going up. You trail it with that hybrid frog box. So when you're one hybrid frog box to the plus, then your stop would be at the break even. Now, what I generally do is I trail it, and then when I see an opportunity to jump it to no lose plus dinner for 2, I accelerate and then lock in the gains. And then so the initial risk is not to the PSAR, but it's really just back to the open, and it's using a 0.7. So I started with frog boxes and then shaved it down to a 0.7, and I've gone as low as 0.3 frog box on when the market has been very volatile. So that's an advanced technique that I teach in the day trade course, and the start or the trailing stop is very strictly a trailing hybrid frog box right from the open, mechanical, with the override of being able to jump it to no lose plus dinner for two as quickly as you deem necessary based on previous. We've had plenty of discussions with that. The PSAR stop is when I'm framing other kinds of trades and there's a PSAR flip. So price is moving down and then the PSAR is moving down and then price reverses and then there's a PSAR flip. Then whenever we take that entry, the routine stop in that framework is the PSAR. But that the hybrid frog is a special case just at the open. And again, it's an advanced technique that I teach in the day trading course. That's all I want to say about that. But this is the correct entry. And I would already probably be getting that stop to here because I don't like losing money. But thanks for the chart. All right, let's just get right to the, we'll get right to the weekend reports. Okay, so we have, let's see here. Come on. All right, so we're still holding, we're seeing a bullish volatile. We're back to overbought now on the 2-day and the long term. And meanwhile, we're kind of stuck in the high middle of neutral on the middle multi-time frame NDX. We're still in risky territory here with the risk Z, although it is now becoming solid spring, and that makes me ready to trade the swing trade to the upside starting Monday. Theoretical exposure of ETF2 is still 40%. The leading candidates are the S&P, the Qs, and IYR, and that was still the holdings for all of September. So, you know, we're still in the winning positions for the whole month of September. There's been that kind of stability, so that's good. Monthly market health check. This thing came down and tested 425 and then had a micro rebound. I'm not really happy about this until it breaks out above 450. Everything between those two lines to me just feels like a tactical trading space. So I'm cautious on that. On the 9-day health check, you can see that the recovery has already been made. And this is almost a 1, 2, 3 style entry at about 444. So that's what Monday's new swing trade looks like for the shorter term traders. On the weekly, you can see just how volatile this last week was. The previous one that was big was here, and it didn't even get through the PSAR. The last one that got through the PSAR was way back here, and then that recovery was nice. So this one had more of a significant sell-off, and so I'm still I'm still cautious on this one, but I like the entry at 444, and then certainly you want to have a nice position in if it were to get above 455. So that, again, that's the tactical trade space in here. On the 3-day, again, you see it was like a 12-day sell-off. We had a nice strong week to the upside. This is how dangerous this thing was getting. That's the worst we've seen in the last, 4 months by far. So a very serious test. Let's see. And Blended monthly rebalancing portfolios. The S&P really showed leadership. Diamonds were strong, and the mid caps were also strong. So it was really the U.S. This week. Energy has staged a nice rebound. That already feels like the bounce is in. Yeah, there could be a little bit more, but it's definitely an uptick in a down market for energy. So I would be cautious about reading too much into that right now. The strength in energy and materials is what propelled the blended commodity. Financials, I think, are the next leader. I think that's the next leader up, is how that's shaken out. So I would be ready to look at FAS to the upside. That's the triple leverage finance, and probably Goldman Sachs. Salesforce, just rocketing to the top. American Express might be another good one in that financial space. Goldman Sachs hasn't made its move yet, so it's hard to see how finance could be great without Goldman Sachs tagging along. So, but right now it's American Express and Visa are the leading candidates. So there may be a way to play that. Yeah. JP Morgan had a nice, in fact, Goldman Sachs is the laggard. Sector spiders. Transport's coming along. And Bob uploaded a critical state chart for us. CSX, the railroad industrial, was in a nice critical state in the bottom of a sell-off channel. So CSX should be on your short list. And here's the banking sector had a nice week. So again, I think there's room still in the finance to stretch its legs. Regional banks also looking good. So I think that's where we want to be looking. World market model. U.S. large caps and especially tech have been leading the way. Troublesome news here in the Western Hemisphere. Commodities and oil is where the strength is in the alternates. Only 4 of the 10 indexes are above their 4-month moving average. That's the S&P and tech, Japan, and the Euro-Asia large cap blend. So that's really a conservative equity stance right now in the markets. In the ETF2 model, the leaders continue to lead, and that's all your growth and tech and large caps. And energy has joined the fray there with USO. But really, that's about as far as you need to look, as those top 3. Liquid volatile day trading material there in the energy sector in Brazil at 3.66. And oil and gas exploration, 6% daily volatility and plenty of volume. Nothing wrong with that. Shifting to the daily. Again, all the channeling and overreaction signals paid off. That's worth taking a look at, rolling back the dailies and maybe listening to the reports and the discussions we had about those signals fire when you are really feeling nervous about the market, and it's a way to protect against your own nervousness, at least for me, that those signals force me to take the unpleasant side of the trade, the unpopular side of the trade, which is where the gains can be made. So it's worth going back to this past week and looking and listening to that, to those signals. Lots of dojis today. Still plenty of auto framers to work with. No breakouts per se. I think it's just a continuation trade on Monday. Lots of auto framers still in the globals. And as you can see, the auto framer has plenty to choose from. Nike got smashed today. And real strong performance here in Chevron, McDonald's, ExxonMobil, American Express, JP Morgan. That's kind of the finance, and Visa. That's those top three are all financials, and the other three are energy. So that's telling you where the juice is. And then energy, oil exploration, and oil itself were the big winners. And then the only other thing in the green, finance. I think that's the sleeper right now. All right, that's everything I got for today. We'll get this published and processed, and we'll be ready. Tomorrow is the last Q&A session for the foundations guys from this cohort. New cohort starting in October. If you're in the sound of my voice, and if you're in the foundations course, you can check in with me. I'm going to give you a good deal on the staying connected to the chat room and access to the material on Talent LMS at a discounted subscription rate. So I will talk about that tomorrow. All right, that's everything I got for you guys. We'll get this published and posted, and we'll be ready for you tomorrow at 6 for Foundations Q&A and swing trade patterns at 8:30. Take good care and see you tomorrow.